everybody. It is Rick and Megan, and we are here this week with another hot topic just for you. Are you ready, Rick?
I am always ready. Just ask me.
Sounds good to me. Okay, so a lot of times we run into houses that are fixers. Probably 50% of the houses on the market, they need some work. They might need roofs or flooring or siding, kitchens, bathrooms, you name it. They need it. And so we're going to talk about that today. When you find a fixer, here is how to figure out if you can buy it. Are you guys ready? Here we go. If you find a fixer and you'd like to buy it, sometimes you look at a house and you go, oh, this house is terrible. It's ugly. No one will want to buy it, but it might also be the gateway into a neighborhood that is much more expensive. And so people will overpay to just get their foot in the door. And so it's really going to be area specific on if a fixer upper is really going to be a deal or not, right? So you need to consult with your realtor and see what are the other houses sell for in the neighborhood that are fixers, that aren't fixers, and do they have any offers yet? You know, what's the seller's agent's strategy to work through this fixer situation? So remember, when you see a fixer, it's not always going to sell for a deal, because for some people, it's their entryway to get into that neighborhood, right?
Right, 100%.
Or they have a long-term, really long-term use for the house. So let's say it's a 4-bedroom, 2.5 bath in North Tustin. Like, they're never going to move out of that house. They're going to live there forever. So they don't mind paying a little bit extra just to get in. And they are related to Chip and Joanna Gaines. So they're going to, fast track.
Get a makeover.
Yeah, exactly.
Yeah.
So, all right. So the first thing is to consult with your realtor and find out what's the deal with this house. The second thing is checking with your lender to make sure that they can lend on the house, because there's some repairs that will become a lender repair requirement. Rick, tell us about what kind of repairs you've seen that are required to be repaired before escrow can close.
Yeah, that's a great question. Yeah, really, Megan, it runs a wide gamut of what you can and cannot do. So some people think that because the house needs carpet and paint and general maintenance, that's a rehab from a lending perspective, and actually it's not. As a lender, we don't really care so much that the carpet's worn or that the house needs paint, things like that. As long as the most important thing for lending is the house functional the way it sits. So let's answer the question, what makes it non-functional? Well, if you're missing a range and oven. You have broken windows, you have missing flooring, you have holes in the walls, things like that. So things like that will be called out as a repair item. And depending upon how extensive that is, sometimes it's only just some minor cosmetic fixes and you're in. If it's substantial rework, let's say the roof is really bad, you're seeing through the sky in a house, and you got obviously a bad roof situation, you got no appliances, flooring's gone, that becomes more of a rehab situation. And so we can do rehab loans on those. It's just a different process. You just got to be patient with that process. But listen, it's a great loan. If somebody can actually get into a house and do a rehab, it's a really good way to go, because the key is, Megan, that you can finance those upgrades and that rehab into the loan. So the good news is that once you close escrow, you don't have to go out and look for the money. You get the money while you're in escrow, and you set those repairs up in advance so that you have a game plan from the day of closing. So it's really a pretty good way to go.
It is a good way. Is that an FHA
203K? There's a conventional version of that as well, but that 203K is really, really good because there's two different versions of it. And actually, they've gotten easier over the years in terms of how you do those, and the rates are good. So that's really the best way to get in, because really you can get in with a 3.5% down payment and spend $50,000 on a rehab and get that paid for in the loan. And the rates are good. So you can go in for a very, very low down payment, not have to worry about having $100,000 cash to fix a house up. Go in there, if it's $50,000, $60,000 for the rehab, boom, you got the money. You close escrow, the rehab is done, and it's paid for, and you're good.
Yeah, I love a 3K loan. And
Mm-hmm.
people don't use them very often. I mean, around here because the agents don't understand it, and
We don't.
so yeah, so it's hard to. It's like when you present an offer to a
Mm-hmm.
seller, they look at financing, and
Mm-hmm.
they're probably like, "Oh man, this is going to be more work," because it is more
Mm-hmm.
work. Because
Well, it
when
is.
you're
Yeah, go
when
ahead.
you're in escrow, you have to get estimates for the
Mm-hmm.
things.
Mm-hmm.
And then when you close escrow, you have to have the house repaired with licensed contractors, and then they're paid. I think escrow holds the money, right? Then they
Correct.
pay.
They have a reserve
Um,
account. Yeah. So,
yeah.
so when we have those situations, this is where we step in, is that we educate that listing agent on how that program works. And that really is not going to delay their escrow, because what they don't understand is those repairs are done, the rehab is done after close of escrow. So the only change is that it's really hard to do those in 30 days because you have to get the contractor to do the bids to get those approved. So really, you can do a rehab loan, Megan, in about 45-day closing, and then after the escrow is closed, that money goes into the escrow account, the holding account, to pay the draws to the contractors as the work gets done. So it's actually a really good loan, and it's a good loan for the seller too in terms of getting a good buyer.
Yep. Yep. I love the 203K loans. I
Mm-hmm.
just don't know why they're not used more often. But I think around here, it's probably when a house goes on the market and it's a fixer, there's so many other buyers for it
Mm-hmm.
that
Right.
don't have to do a 45-day close, for example, that are putting big down payments down or are paying cash, that it's just that buyer has a
Yeah,
tough
yeah.
competition
Well,
there.
yeah, and you're right. I think those types of properties tend to draw the flipper types of buyers. They'll come in
Mhm.
with a line of credit and pay cash perhaps. But look, you and I are both a fan of helping a homeowner get into their home. And if we can take an offer with a home buyer that's maybe got 3.5 or 5% down, they've got pretty good credit, and they can really want to get a house, let's help them out. I'd
Yeah.
rather do that than getting a guy that wants to flip the house and make 100,000 profit on it. Let's get someone
Yeah.
to move in there and stay in the neighborhood and make it right.
Yeah, yeah. I had a seller one time sell to his tenant and use a
Mm-hmm.
203K loan, and that was real cool. They were able to get things the way that they
Very
wanted.
good.
Okay, so as I'm
Mm-hmm.
understanding it, you said that as a lender, that when the appraiser goes out to the property and they see
Mm-hmm.
adverse conditions, leaking roofs, broken windows, anything
Mm-hmm.
egregious, missing
Mm-hmm.
flooring, missing
Mm-hmm.
appliances that are supposed to be
Mm-hmm.
built in,
Mm-hmm.
that's probably going to get called out. So if you're looking at a
I
fixer
will.
with those kind of repair items, that you need to check
Mm-hmm.
with your lender first and make sure that it's not,
Correct.
yeah, unable to lend on. All right. So you've looked at the comps, you've checked with your lender. Now you have to
Mm-hmm.
say, like, can I really afford to do this? Like,
Mm-hmm.
you got to sit down and prioritize the projects. Are these like livability issues that you're not going to be able to live in the house while you're
Mm-hmm.
doing this?
Mm-hmm.
How much is this going to cost? Make a list of priority projects and a budget. And nowadays, with the internet, you can go on the internet and you can find out about what people are paying for certain projects. And
Mm-hmm.
then you can go ahead and add 20% to that, because there's always
Right.
going to be unseen things that come up that is going to cost you more money.
Yeah.
So it'd
You
be
can count
better,
on it.
yeah,
Mm-hmm.
totally count on it. So if you're going to spend 100
100%.
grand, say 120. Just save yourself the headache later. Be realistic.
Yeah, that's for sure.
Now, also, if
Mm-hmm.
you're buying this house that's a fixer, are you living in it while you're fixing it? What is the cost to carry to have that house and not live in it while you're fixing it? Is it 1 month, 2 months, or is there even a rule with your lender that you have to move in within a certain period of time? Isn't that the case, Rick, that
Yeah, I
lenders
mean,
require you move into your house?
well, they're required to move into the house when the work is done. It's not a situation where you can get the work done and then 6 months later move into it. That creates a different scenario. It's the intent is always for the buyer to own or occupy the house. And when you look at it from a perspective of are they going to live in the house? Well, guess what? If you're spending $50,000 on a rehab, you're going to move into the house as soon as it's done. You're not going to hang out
Yeah.
someplace else, right? So, I mean, that's what's really important for any buyer. And this is really, really important because this is a big issue right now in our business. When a buyer says they're going to occupy the house, you better occupy the house.
Right.
Because if you don't occupy that house, let's take that example. It's an FHA loan. It's a HUD government-backed loan, and they say, "Oh yeah, I'm gonna live in the house and the owner occupied." And then 6 months later, a tenant moves in.
Oof.
They're gonna have a problem, big
Yeah.
problem that gets
Yeah.
caught. So I would never suggest doing that, especially against the government agency, because that can create all kinds of legal, criminal, and civil nightmares for you, and you don't want to go there. So
Right.
if you're going to buy a house and make it a rehab, you're going to live in it, get the darn rehab done, move in it, and be done.
Right. I agree.
Yeah.
And also, insurance requires
Mhm.
typically that the house is occupied, that you live in the house in order to be insured. They don't like vacant houses. And
Yeah.
so you have to check with your policy too to see how
Mm-hmm.
long that's going to take. I think that's about it for my notes on buying a fixer. Do you have anything else to add?
No, I think it's perfect. You did a great job with that, Megan, as you always do. And I think that's a missing opportunity right now. I mean, we see these houses out there, and gosh, it really, it's as much as anything you made the point earlier, it's important to really educate listing agents on how that's going to work, because they don't know what they don't know until we tell them what they don't know sometimes. But the
Right.
key to that, as we know, is that that listing agent has to be, guess what, open to the idea of listening to how that would work. And if
Right.
you have an open-minded agent and a reasonable seller, we can make those deals work every time.
Yeah. Yeah. Good point, Rick. All right. I appreciate your time. And we've got a hot topic for next week. We'll tell you about it next week. How's that?
Yeah, it's gonna be good. Can't wait.
All right.